Hey guys, Red here, Section 8 guy. Thanks for watching. If you're new to the channel, don't forget to hit that subscribe button, like this video, and leave your questions and comments below. We'll get to all of them. Guys, I want to talk to you today about how to get a loan for a rental property. Now, a lot of people out there are maybe under the impression that you need cash. You always need some cash, okay? But it's okay to get a loan for property. I prefer using cash, but I also understand that getting a loan is completely fine. At one point, everybody should use financing. And if you don't have the capital up front to purchase a home in cash, totally understandable. Not a lot of people do. Getting a loan is the next best thing. I'd rather you have a rental property and use a loan than not have a rental property at all. So how do you get a loan for rental property? It's pretty simple, guys. It's all about finding the right lender. Just like you get a conventional home loan for your home, you get a home loan the same way. You go to lenders, you go to mortgage brokers, you go to banks, tell them what your plan is. You get pre-approved the same way, right? Credit checks, financial histories, do the documentation, fill out what you need to. And it's the same thing. Banks will go through, lenders will go through, they'll make sure you're qualified for the loan. You'll talk to them about what you want, okay? How much money you want. They'll pre-approve you for that amount, okay? So for example, if I want to buy a house that's $100,000, I go to a bank, I say, I want to get approved to buy a $100,000 house. If I want $1 million, you go to a bank and say, hey, I want $1 million, okay? The qualifications are going to be totally different, right? So you tell them what you want up front and they say, okay, great. You say, I want to invest in rental property. Do you do that? Yes, we do. Do you lend in West Palm Beach, Florida? Yes, we do. Okay, let's go ahead and do a pre-approval process, get the process going. Right, they're gonna check your debt to income ratios, they're gonna check your credit scores, they're gonna check your FICO score, they're gonna check everything. You're gonna check your 1099 earnings for the past couple of years, W-2 earnings for the past couple of years, financial history, how you've done, debt you have out, everything, how many loans you currently have. So they're going to do the same dive they do as if you were buying a home for yourself, okay? Now, these homes, because they're loans, they're personal loans based on you, it means the house is going to go into your name. Because of that, you're the one that's going to get the deep dive into your financial history. Now, that's totally fine. If you're ready to buy a house and you can afford a house, it's not going to be a problem. So getting a loan for a rental property is the same thing as getting a loan for your home. Now, less financiers are going to finance you because it's a riskier loan. For example, if you fall on hard times, okay, and you have two homes, you have the home you live in with your family and you have a rental property loan, right? Which one is going to get the priority to pay the mortgage? Your home loan, right? It's not going to be your investment property loan. So to banks and financiers, investment property loans are riskier, which means you may have to put down more money, 25%, 30%. In some cases, still 20% or 15%. You know, every lender is different. Every person's different. Qualifications are different. I can't sit here and give you blanket statements to cover everything and anything because lenders are unique in the sense that every person is unique. And, you know, what a lender can do for person A, they can do something different for person B based on person B's credit score and their finances and their financial history, their current assets and debts, right? Everybody's different. But finding lenders to lend on short amounts of money. So if you want to invest in places where I've invested a ton, right? Places where the acquisition costs are lower. The lower amount of money you want, the harder it is to find lenders. Now, I'm fortunate because in our coaching program, we work with a lot of lenders that do lending under $100,000. That's very hard to come across because a lot of lenders don't make any money. It's hard to make any money on short amount of loans. Think about it. If you get a 4% loan on $500,000 versus 4% loan or even 5% loan on $50,000, the bank's making so much more money lending on more money, right? Because that percentage is just drastic over the course of 20 or 30 years, that extra point or the same amount of percentage points. So banks don't lend on short acquisition costs, lower acquisition costs. Banks would rather lend on a ton of money rather than a little bit of money. So it's hard to find people that will lend on investment property and cheap investment property. but we have them, we work with them in our program. So they're out there, they're hard to find. You just have to find the lenders that will do it. And how you do that is you do your research, you ask questions up front. Don't waste your time. Say, listen, this is what I'm trying to do. This is where I want to invest. This is the price I want to invest in. This is my credit score. Can we make this happen? Yes or no? And if you get a, yep, we do that stuff like that all the time, great, move forward with the pre-approval process. No, we don't do that stuff. Okay, find somebody else. All right? Pretty simple, guys. Leave your questions, comments below. I'll get to everyone. See you soon.